This week has been strong for risk assets. Equities are on the front foot. You've got the dollar bouncing back. We've, in many cases, started to recoup significant portions of the losses made since the big tariff announcements from the Trump administration. How much good news is now priced in? How much of this is still to go? How much more of a driver can we see coming through in the next week or so from these kinds of narratives?
Yeah, good morning, Guy. Great questions. I think, one thing to keep in mind is that Trump has this wonderful ability to propose something that's so absolutely outrageous that nobody would have even thought of it. And when he pulls back, what's left is still something that a few weeks or months ago would have been quite preposterously extreme to most people's views, but suddenly seems a lot better. And so that might be the situation that markets are looking at right now, where we had the tariff proposals that had a lot of people with their jaws on the floor. Boy, what is he thinking? Then we had the pullback. Now we've got this sort of negotiation period. And the potential for some sort of reset. Maybe we have a reset with no tariffs, but maybe we have some tariffs still in place that might have been, unimaginable or unthinkable previously, and suddenly that looks like good news. So short term, maybe the market has more potential for a rally if we start to see some of these agreements coming into place now. Doesn't seem like you need to do that much to get a satisfaction or a nod from the US administration. But longer term, we're going to have negotiation periods. We're going to have some more fractious moments for sure. And we're going to have some tariffs remaining on sectors that are exporting to the US. So, I guess short term you could see an extension, but longer term there's going to be those doubts hanging over things still.
Well, Paul, on China specifically, Trump says there are talks. We don't know who with. China says there are no talks. Then we get this news on stimulus this morning, China vowing to fully prepare emergency plans for external shocks. How should the market take all of that?
Yeah, really interesting. I think what the market is feeling is that there's some sense of de-escalation here. So whether there are direct talks going on, whether, Trump and China are talking past each other a little bit, the fact that there is, a little bit of retrenchment coming in, and it sounds like that the US is preparing to de-escalate further potentially at some point. The market seems to be taking as good news. China, by the way, seems pretty unfazed by things at the moment. It's not taking extreme action. It's not really pumping up efforts to support the economy just yet. I think, from that perspective, there's still a lot of long-term risks, but you do get the sense that at some point there's going to be something that's going to show us a little bit more of a coming together, and that's the way that the market is trading it at the moment.
Absolutely. We need to see some of this showing up in the hard data. We need to get an idea of what is going on. Paul, we get payrolls next week. What do we know about what's happening in the States right now? I'm listening to consumer companies talking about recessions already. Yeah,
we hear that sort of thing. We've heard, the Trump was told that the supermarket shelves might be empty in a couple of weeks as well. It doesn't seem like he liked that very much. We're hearing, sort of initial reports that shipments to the US, that the expectations for arrivals of ships, for truck traffic is starting to fall out. But I think it's going to be 2 or 3 more weeks before we really start to hit that wall in terms of the economy and the import picture, and that might give us a clearer view.